entry model or just confirmation of price, right? But I do love balanced price ranges. Okay, guys, so this is where I would expect longs to start trying to step in here. Right, so what do we need to see for the longs to really start stepping in? We need to see more inversion. So we just inversed our first bearish fair value gap right here on the 1 minute. And now we're testing VWAP. ES does not look like it's trying to really fight right now. ES looks pretty weak, looks pretty bearish. But we've inversed our first 1 minute fair value gap, but we have not inversed this one up here right around VWAP. So when we don't see inversion of our second fair value gap like that up here, then we might expect price to come down a little bit further and maybe come down and try to test new day opening gap down here, right? That's why I love inversion. I love inverse fair value gaps because they really tell us the story. They give us the narrative of what we want to see. It really just what inverse fair value gaps are doing is they're telling us what order flow is doing, right? Is order flow bullish or bearish? So what do I mean by that? If we are respecting a bearish fair value gap like that, that means order flow is bearish right now. That means sellers are in control or the algorithm is bearish, right? Whatever you believe in. But let's say we come up and close above a gap like this, a bearish fair value gap. That is starting to show us that now bullish order flow is in control. The buyers or the algorithm have, bullish price action is in control. That's what these inverse fair value gaps are telling us. And that's why I love using them so much. Because what people don't usually do, or what people usually do is every time they see a fair value gap, they just jump into an entry and they say, oh yeah, we'll bounce from that fair value gap. We're bearish right now. But they don't really wait for the bounce. They just get their entry right when we tap into a fair value gap. They don't wait to see, did we create more structure? Did we actually start pushing through this fair value gap and creating bullish order flow? Or did we really bounce off of this fair value gap? And is it aligning with my overall bias, right? You got to start thinking of the whole story. What's the market narrative? What is the narrative? What is the story that the market is trying to tell us today? And sometimes you're going to have to wait a long time to see what that story is. Like yesterday, right? We had to wait a long time to see what our narrative was in the market because if we go back and look, we were very choppy. Where was market open? Market open was around here, right? So we were extremely choppy for a while. We made one move, no fall through. We made one move here where I called out a long position, right? And I think the long position I called out was stopped at break even or something because I didn't trade it. But and then we called out these shorts, and I called out the first entry here. And even if you got stopped out at break even on that entry, I called out another re-entry, and we realized that the story was starting to change. The narrative was changing to now looking like it wanted to start coming down to take out sell side lows. And look what happened. We waited. We waited for inversion right here for this 1 minute bullish fair value gap to get inversed and then create a balanced price range. Price traded back into the balanced price range and then absolutely sold off, right? That's why these inversion fair value gaps are so key. And if you can align it with the overall market narrative, we were talking about being a little bit bearish. We have sell side lows. We created a bearish, reversal pattern up here. Everything was looking very bearish. You read the narrative. You wait for your entry model. Boom, you take the shorts and you catch a big move, right? So that's what you want to do every single day is that exact idea. That's why you don't see me rushing into trades right at market open because we don't know the market narrative yet unless it's been shown to us on pre-market. If pre-market has shown us that, we already have our narrative, we already see what the price wants to do today, cool. Then right at market open, I'll probably look for a trade. But most days, we have to wait for at least 10, 15 minutes to see what the market truly wants to do to find our good setups, right? That's the way I look at it. And I have found in my trading that is my edge in the market is being an observer, being patient, and only executing my A+ setups. Before I did that, guys, when I was not being an observer, when I was trying to predict every little move in the market, when I was trying to force my entries, when I was not waiting for A+ setups, I was blowing through accounts left and right, and I had no consistency and no success in this market. So I finally came to the realization that if I just stay patient and only take a few trades a day that are only really solid high probability setups, I am way more likely to see consistency in my trading and be successful. And that's exactly what I found when I started doing that. So you have to find your edge. And I do believe that most people's edge in the market will probably come from some form of patience, right? Not everybody, but most people need patience in their trading to have an edge. That's what I found, and that's what I've, with my mentorship students or with, whoever I'm teaching, I found that that's what most people need in their trading is patience, right? And you have to actually practice that patience, or else you're not going to find any consistency in this market. So that's kind of that is truly what I believe, right? Or I wouldn't be saying it, I wouldn't be teaching it, and I wouldn't be teaching it if it wasn't successful for me, right? I'm only going to teach things that have been successful for me and that continue to be successful for me. All right, so just kind of back to our price action right now. We continue to bounce off VWAP. We continue to bounce off this 1 minute fair value gap. So right now, what I'm reading in this market is that we are struggling around this level, that ultimately we want to move higher. Ultimately, price wants to move higher. But right now, we want to manipulate and kind of accumulate orders right here and possibly come down a little bit lower to grab some more sell side. And what we need to wait for is, yes, exactly, right? We need to wait for the news coming out in a few minutes, 2.5 minutes. And we need to wait to see, maybe we get SMT divergence. Maybe we get a reversal pattern, right? We wait for these things to happen to then give us that conviction that now the longs are truly stepping in, or maybe the shorts are truly stepping in. No patience is the reason why I blow accounts, and I think that's true for most people, Chris. I don't think you're there alone, man. I think that's true for most people. That was true for me. I know that. Yeah, no slippage, guys. No slippage. If we didn't learn from the past, you got to learn from the past. Do not have your positions in. Do not take an entry with this news coming out in 2 minutes. Aren't we bouncing off of a 2 minute? Well, let's check it out. Yes, right? So that's why I talk about inversion. Inversion. If we are bouncing from this level, right now, bearish order flow is still in control, right? The shorts are still in control. So we're not taking a long yet. Right now, we're still thinking that price could come down and grab some more sell side, right? Until we do come up and inverse this 2 minute, or, a 5 minute up here, or a 1 minute up here, or create a reversal pattern with SMT divergence at the lows, right? So you're correct, right? We're not going to look to take a long while we're in a 2 minute or a 1 minute bearish imbalance, but that doesn't mean the longs aren't really in play overall, right? Because we're reading the overall market narrative, and right now the overall market narrative is still telling me bullish. So I just wait for us to start creating that bullish price action. But notice how I came into the day saying that we're probably going to come down and grab sell side. That was the first thing I talked about, was that we're most likely going to come down and try to at least grab London low, maybe trade into new day opening gap, and at the most come down and grab Asia low, right? So we expected manipulation to come down and grab sell side liquidity for us to then have the reversal, right? So now we have SMT divergence. ES takes out the low and Q does not. But everything changes because we have 2 red folder news events coming out right now. So do not be in an entry. I would definitely stay out. Wait for this news to come out. Wait for all this crazy volatility to die down. And then we'll look to see, okay, does the news match up with our overall bias? Does it match up with our narrative? And if it doesn't, we're going to have to rethink our plan. Okay, so news is coming out right now. So just be careful here. Buenos dias, Pablo. Yes, do inversions have to happen at the same time frame the fair value gap was created on? Okay, that's actually a really solid question. I haven't heard that question before. So, I believe they do, but you can take some information from like your example, right? Yes, that's a great question, because I think they should be inversed on the same exact time frame for overall conviction, just to make sure that you have the confirmation you need. But there's going to be times where you have such a bullish bias that you see, let's say, for example, there's a 5 minute bearish fair value gap, and the 1 minute time frame has closed above that 5 minute. You're now going to use that as your inversion, because you really have that strong expectation that price is going to continue bullish, that's still a little bit aggressive. I would say if you want to be very conservative and very patient with your trading, you always wait for the same time frame to be inverse, right? If it's a 5-minute bearish for value gap, you want to see the 5-minute close above that level. That is the very conservative approach. But if you're being a little more aggressive or you have a crazy bullish bias, then maybe once the 1 minute closes above that 5-minute and the 5-minute hasn't closed yet, you're already looking for your long entry, right? So I think it's a mix of reading different time frames in alignment with your higher time frame bias, right? If that makes sense. Hopefully that makes sense. Buenos dias, Alpha. All right, guys. So, again, we created some SMT, but right now NQ is coming for that low. It looks like we want to come down for a little bit more liquidity down here. I would like to see NQ test new day opening gap here. I would like to see that. I think we're trying to. So that's kind of what I'd be waiting for. I'd be waiting to see either you're looking to take shorts, right, off of a bearish level down to sell side, or you're just waiting for us to start reversing back up to the upside. Let's see how the news came out. Positive. So it looks like both of our news events came out green, right? So all of our news today has came out bullish. Tesla earnings came out bullish. So if we're just solely thinking about fundamental analysis, everything is telling us bullish right now, right? But we have to align that with technical analysis. If we don't see our technical analysis levels ready to trade the longs yet, then we can't wait, or then we have to wait. We have to wait for our levels to play out. We have to wait for especially when Tesla is the company that we're reading our earnings from. Tesla has a huge impact on NQ, right? It's one of our biggest NASDAQ companies. So we want to pay close attention to Tesla earnings. Bullish means bearish. Sometimes it does. That's why we just stay patient. Oh, and gracias, Alpha. Muchas gracias, by the way. Thank you for that. Abundant Wealth asked, what do you think of the 5-minute SIBI short? Yeah, right now I would be thinking short, guys. Like I was saying, I'm thinking short until we start to see a reversal pattern. I'm looking for us to come down, test new day opening gap, possibly come down and grab Asia low, right? So yes, I would be thinking about shorts, but so far there's not really a great entry model yet besides just seeing us tap off a 1 minute and a 5-minute imbalance up there. I wouldn't say we have the best entry model yet for a short position. But right now, yes, I would be thinking short until we see our reversal pattern, right? Even though our overall analysis right now is that we want to see a reversal in the market, we want to see the long start stepping in, you can still be looking to catch shorts. Now, let's say you're not at a level yet in your trading where you're not advanced enough yet, right? And this could be a lot of people where you can have your bias be long but still look for short positions, because I know when I first started trading, if my bias was bullish, I couldn't even think about taking a short position because that would mess with my trading. And that might be you, right? So I recommend if that's you, then don't do that. Only look for trades that align with your bias. But let's say you're more intermediate to advanced and you're trading right now, and you're someone who can take trades that go against your daily bias and just try to scalp them, that's fine, right? So like when you hear me talking about, okay, the shorts look good right now, you could look for a fair value gap entry, you could look for an order block entry, you could look for the 5-minute SIBI entry. Just for a scalp, you need to be at a level in your trading where you are comfortable enough to see those levels in real time and be able to scalp them, because I know most people, that will just mess with them mentally. Like for me, it messed with me mentally a lot when I would try to do that. So my rule for myself was when I was still a beginner trader was that I am only going to trade aligned with my bias on the day. And you have to be okay with missing out on certain trades if they don't align with your bias. But then maybe your bias is going to change because now we see the shorts are in control, right? Now you're looking for shorts, and now you can start looking for a short position. But I definitely recommend not going against your daily bias, not going against your session bias, because that will mess with you, and you might not take the clearest trades. If we inverse the 1 hour fair value gap, would you feel more short? So let's look. So let's say for example, we inverse this 1 hour busy. That would make me think a little bit more short for sure. But we also have this 1 hour busy down here. And then we have new day opening gap down here. And then we have another 1 hour busy down here. So there's still a lot of support levels down here that can hold us up, even if we do inverse this 1 hour busy. Let's say, for example, we do inverse this one. Then maybe we'll come down for Asia low. But I wouldn't say just by inversing this 1 hour busy that I'm going to be looking super bearish here. Because there's more to the story, right? We have another 1 hour busy. We have new day opening gap. We have an inverse 1 hour right here. We have another 1 hour here. So a lot of support levels still. But yeah, if we see this inversion and we see extremely bearish price action still happening, then that's just a confirmation that, okay, maybe we're going to move down to Asia low, right? Maybe we'll come down to Asia low. But right now, just looking at this market, I'm still looking for longs, right? We did create a bearish breaker right here. We actually technically are creating a bearish unicorn. So maybe if we come up and test this bearish unicorn up here at the new hour, because we formed this high, low, higher, high, displacement of the lows, fair value gap overlapping the breaker here, if this is how we close. And we test this and we get a strong reaction off of this, then we might see shorts continue, right? So notice how I'm looking at all of our different time frames. I'm going through all of our different time frames. The 4 hour, because right now we're bouncing off a 4 hour busy, 4 hour SIBI. So we're looking at all of our time frames in alignment right now. All of our time frames. And then if we go down to 15 again, we see this right here is our 15-minute opening range breakout level. And we came down and we did not see continuation. We came back and wicked above. So that's not telling me that the shorts are really in control right here. Then if we go back down to the 1 minute, we're waiting for a reversal pattern here on the 1 minute. If price closes above this high up here, that means we have a bullish breaker and that we expect price to start continuing up to grab buy side liquidity, right? That would be my expectation. If we create the bearish unicorn, right, we don't create a reversal pattern here and we come back up and we test the unicorn, I'm expecting price to continue lower, right? So right now it's really just about patience, right? Because we have news coming out again in a few minutes. At 10 a.m., we have new home sales, orange folder, right? So, again, today is going to be all about patience. And that's how it was yesterday, too. But notice how yesterday, if you would have stayed patient like I talked about, right? I talked about being patient, patient, patient. I said, don't trade this. There was no setups here, so don't trade that. Don't trade this. But then right here, there was a decent long setup, so I called out the long setup, and then ultimately we didn't see follow through, got stopped at break even, right? I didn't trade, but a lot of people probably got stopped at break even. Some people took profit, and then if you would have just stayed patient for this move right here, you could have caught a huge move just because you waited throughout this entire time of bad price action, and then you waited for this perfect setup, A+ setup, and you could have caught a great trade. That's what you should be focused on every single day. Not rushing your entries, waiting for the perfect setup, and then taking that perfect setup and taking your profit and walking away for the day. That's what I look to do every single day. All right, so we have 5 minutes until we close. We have some SMT at the highs right now. But ES is trying to make a reversal pattern up there. Do we see how ES is trying to reverse up here, close above this high, creating a bullish breaker? NQ is kind of weak right now, so we'd want to see NQ doing the same thing. But let's say we see NQ close above this high. We close above VWAP. Everything right there would tell me that we are looking to come up and take buy side liquidity. I would probably call out a long position if there's a good entry level here. Right, but we have 5 minutes until this hourly closes. So we do want to see how this hourly candle closes, how the 15-minute candle closes, right? Because we'd want to see this hourly close inside of the bullish imbalance right here. We wouldn't necessarily want to see it close below. And then we'd want to see this 15-minute start turning bullish here, right? We'd want to see the 5-minute really start coming up and closing above this high, inversing the 5-minute SIBI, closing above VWAP. You want to see all these convictions, all these confirmations of this reversal to happen, because if you think about it, once the reversal does happen, if it does happen, let's use our fib. Let's see where our take profit, guys. Do we see how this first standard deviation is directly right at these relative to equal highs up here? Okay, so that tells us that that might be a strong level of liquidity. And then there's still a lot of reward up above to take more buy-side liquidity, right? A lot of reward. So, okay, a few things line up for the reversal. And if we don't see the reversal, cool, then we'll look for a short position down to Asia low and possibly down further. But right now, my expectation is reversal. That's what I've been talking about since market open, right? That we're going to come down, we're going to manipulate, we're going to grab some sell-side liquidity, and then we wait for the reversal pattern to form. We wait for us to close above. We look for longs. If it doesn't happen, cool, we start looking for shorts. You just got to stay patient throughout all of this right here. Don't force trades in this price action right here. This right here is not high probability. Why is it not high probability? Because we're not creating any more fair value gaps. We're having some long wicks on these candles. No clear order flow right now. We're accumulating, right? This is not where you take your trade. You have to wait. And even if you have an extremely short bias right now, you still got to wait for a good short entry. You got to wait for good confirmation that the shorts really want to step in. Oh, thank you, Pablo. Yeah, a lot of scammers out here. A lot of scammers. Members since May 5th. Do they think that I wouldn't notice that they've only been a member since May 5th? I created this Discord before May 5th. Yeah, guys, and then another an announcement, guys. We are having a lot more spam accounts trying to send stuff in the chat, and we ban them as quick as we can. But if you start seeing these spam accounts just like Pablo did, please report them. Please report them and then send them to us, or we are thinking about creating a tab for spam that you guys can kind of send if you guys see these accounts. And if you ever see a Trader Joe account DMing you first, do not respond to it. It is not me. There's a reason that I don't DM you guys first, because there's these fake accounts. So do not respond to these accounts that are trying to act like they're me. I think Fabio got a decent payout from Fast Track. I don't know if it was the full 60K, but I think he got a decent payout. I'd have to ask him what new rules do they have. Where would the shorts start looking good? Well, they would start looking good pretty soon, right? Let's just say, for instance, we do see us close below this 1 hour busy, which we're trying to do right now. And let's say this 15-minute closes below here, right? There's a 15-minute fair value gap right here as well. Let's say we close below this level. We would start seeing them look pretty good. But what we need to see happen is one of two things. Either we come up and we test the bearish unicorn up here. We test this bearish unicorn up here, and then we see a strong bounce from it, and we see a good 1 minute level to target an entry off of. Remember, guys, there's news coming out in just a few seconds, so be careful again. Okay, so we did not get inversion of the 15-minute busy, but we do have a 15-minute bearish unicorn up here, so pay attention to this level. We still could create this reversal pattern up here. So, again, the shorts don't look good anywhere here, but if we come down and we start closing below this low, right, we start creating bearish order flow, that's when they would start looking good again to me, right? Let's say we get a good bounce off the 15-minute unicorn, we start creating bearish fair value gaps, that's when they would start looking good to me. New flipping rule. Interesting, I haven't heard about that. Haven't heard about that. Yeah, I got a few Fast Track accounts just to test it out. I've only used them once, I think. I've tried it once. But I do want to be familiar with all these different prop firms that everybody's using. So we'll see. I'm going to test it out and just kind of see how it goes. I mean, if it's a legit company, then, it could be decent for people to use, straight to funding, not too bad. But if it's not, then I would definitely advise people to stay away from it. You have to make or lose a certain amount a day in order to be counted. Okay, yeah, that's what most prop firms have, I feel like. Like that's what TopStep has. Apex does that now too. What's the best prop firm in your opinion right now? I think there's a few, and the thing is, it just depends on what you're looking for. Like it depends on what your pricing is. Like if you are okay with spending more money. But I would say overall, with rules, with customer service, with payouts, I would say the best two currently, in my opinion, are FFN and TopStep. Those to me are probably the best two currently, with everything mixed together. I think that FFF, Funded Futures Family, is going to be a very good prop firm. I think they're launching today. I've never used my Funded Futures, so I'm not too sure about them, but I've heard good things about them. But it really just depends on, okay, like, are you willing to spend a little bit more? Are you okay with spending more? Are you okay with, certain rules? It depends. I think it's different for every trader, right? Every trader is going to have a different opinion because some people like certain rules more than others. That's why I just like talking about a lot of different prop firms, so then you start to realize, figure out which one you like more. Here's the reversal pattern here, guys. Oh, of course, Tibor. Of course. Guys, these are the longs I was talking about, right? We're getting the reversal pattern. The reversal pattern here. Let's see. Did that news come out? Okay, more positive news, guys. So all the news that's come out today has been green. Right, it's been good. So we just created the bullish breaker, right? So now the highest up close candle is going to be our breaker block. Where's our highest up close candle? It's this one right here. So a big breaker block here. But now we are creating a unicorn model. We closed above the highs. So I would start looking for us to either retest the breaker or come down and test the 1 minute unicorn once we create it. And then you're looking to target buy side liquidity up here. Right? You're looking for these longs. This is finally the reversal pattern I was talking about. Right? You're looking to target up here. You're looking to keep your stop. I mean, obviously you'd want to keep your stop below the breaker, but that's a pretty big stop loss. So silver bullet, you'd want to at least keep your stop below this candle right here. So maybe keeping like a 50, 45, 50, 60 tick stop here would be beneficial. So now we have the bullish unicorn on the 1 minute. So now what you want to see here is for us to test the unicorn, this fair value gap right here. You'd want to see us test this unicorn, and you'd want to see a strong bounce off of it. Okay, and once you get the strong bounce, if we don't get the strong bounce, okay, never mind. Right, we haven't gotten a strong bounce yet. You'd want to see a strong bounce from this level. Again, we are still in a 15-minute bearish unicorn, which is why this might be a hard trade to take. It might be a little more risky, but let's just look at the 1 minute. If this 1 minute starts bouncing pretty good, at least from the breaker block or the unicorn, I would still say the longs are in play right now. I would still say the longs are in play. We just got a good bounce so far off this breaker around VWAP. But now you need to be careful right here. This is where you need to be careful because we just got a strong inversion here on the 1 minute, and we are in a 15-minute bearish unicorn right here. Strong wick right here, right? Very long wick, strong rejection. So you do want to be careful at this level. So what you'd want to wait for now is probably for us to get a strong bounce off of this breaker block right now. Like we're seeing, right? You'd want to see a very strong breaker block here, or a very strong bounce off this breaker. But just so you know, this would be a risky entry in the longs currently just because of the 15-minute bearish unicorn. So I would be careful at this level. Remember, we do want to focus on our higher time frames here. So if you have a strong conviction that these longs are going to step in, and you're willing to be a little bit more risky, you're just waiting for a strong bounce to take the longs. Now, if we see the strong, very good reaction off the bearish unicorn right here, then we're starting to look for shorts, right? If we're going to come down and inverse the bullish breaker on the 1 minute, let's say we close below right here, that's now when I would really start taking the shorts, and I would take them down to this low and to Asia low. But not until we inverse the bullish breaker here. I wouldn't take a short until we inverse the bullish breaker. If you're not consistently profitable, 100% don't do straight to fund it. Oh, I agree. I completely agree. Then, yeah, at that point, you're just wasting more money than you should. I completely agree. What account size? Oh, so I just got two of their smallest account sizes just because I wanted to just test it. Because, like, if I'm using a new firm, I'm not going to go and pay a bunch of money for their big, account sizes. If I haven't tested the firm yet, if I don't know how reliable they are, I'm not going to spend extra money if I don't need to. So I just got two of the smallest sized accounts just to test it out. And if it goes well, right, if I get to a payout level and they're very trustworthy and I like the rules, then cool, I'd maybe buy another account, but I would get a bigger account or get a few big accounts with them, right? But I don't recommend, if you are using a brand new prop firm that has not established credibility yet, I would not go and get a huge account size and spend money on them until you know that they're legit. That's my recommendation. Currently testing the GT, trying to get a decent payout. What size account is that? I don't know what the different names are. 150K, nice. I think 150K is my favorite account sizes, like on prop firms. What I would honestly, any day, I would rather get multiple like 150Ks or multiple 50Ks than doing like a 250 or a 300K. In my opinion, I think that's smarter. I think because if you're trying to do a 250K or a 300K and you have drawdown, like that drawdown is going to catch up to you quick, and the profit goal is so big that it makes it really difficult. So I always recommend like just get multiple 50Ks if you're trying to do that, or get multiple 150Ks, and then you can spread your risk much better. You can manage your risk much better. You don't have to hit this crazy profit goal that, and your drawdown, you can pay attention to it more. The biggest account they got, the drawdown is 15K. Can we follow your size with that account? I wouldn't say you should do that, no. Because it just depends on what your trading style is, what your risk management plan looks like. But again, if you did trade with my sizing, that would give you only about 5 days of full loss limit, and you would blow that account. So I don't recommend doing that. Because again, I'm risking about 2,000 to 3,000 a day in my trading, and if you only have 15K of drawdown, that only gives you 5 days, right? Of 5 days straight of losing, and that account's gone. So I wouldn't recommend that. I would recommend going definitely smaller than that. The prop firm I'm trying out is Fast Track Trading, just because I hear a lot of people talking about it now. So I just bought 2 accounts, and I'm going to test it out, see what it's all about. I've only taken 1 trade, I think, on it so far, and I bought 2 25Ks. And I just traded micros on it, right? Just trading micros. I think the profit goal is 1250. The drawdown is 1250. So the way I break it down is like, okay, if it takes 5 days, if you have to trade for 5 days to get a payout, and I need 1250, well, then I could target 250 a day and then get a payout after 5 days, right? Or I could just target 200 a day and get a payout after 7 days, right? I'm not in any rush. Not in any rush whatsoever. I'm really just doing it to test it out. What's up, Christian? You're flying soon. Where are you headed to? Made pre-market 3,000. There you go. You just covered your whole flight right there and more, I'm sure. Very nice. Thank you, Jolly. I appreciate that, man. Hey, going to see your family. Nice. Have you ever lost 15 trades, one after another, like 3 lost trades? No, I have never done that personally. I just think it depends where you're at in your trading, because it just depends. Like if you're not emotionally stable with your trading right now, that could very easily happen to you. Or what you'll do is, since you're already sizing up so big, once you take a few losses, you're going to size up bigger, and then it's not even going to take as many trades, and you're going to blow your account in maybe 10 trades or 5 trades, because the emotional side of it takes control, right? So like that's why I say that, because yeah, realistically you're probably not going to lose 15 trades in a row, right? I would hope not. But what does usually happen is you lose 5 trades in a row, and then you scale up, and then it only takes a few more trades for you to blow that account. That's why I never recommend sizing up. Just because that's usually what happens. That's what I used to do a lot, and that's when I would usually blow my accounts. Because yeah, you're probably not going to lose 15 trades in a row, unless you absolutely have no understanding of trading whatsoever. But it's normally going to happen where, okay, you only had to lose 5 trades because you sized up double, and now your account's gone. Okay, so let's look again. We are coming back up here. We closed in like 2.5 minutes on this 15-minute candle. So what we'd want to see the 15-minute do if the longs are going to step in is close above the unicorn here and start closing pretty bullish. But again, this price action is not very good right now. As much as I want to see these longs come in, we really got to wait, for a good fair value gap entry or good bullish price action. Because right now it's not really stepping in. It's very choppy or very range bound right here. Not really doing anything. We're still respecting the bullish breaker. That's why I said I would not take a short until I see us close below this bullish breaker. Because notice how we didn't close below and then we pumped again. Right? That's why I wait for these levels to be inversed or disrespected, mitigated, whatever word you want to use. And then let's just look at this 15-minute, because we want to close right here. We want to see this 15-minute close above this level right here. Close above the fair value gap. Same with the 5-minute right here. So I do want to see the long step in. That's been my initial analysis, is seeing these long step in, but I still got to wait to see if there's a clear enough level in entry models to take these longs. Every time I get funded with FFN, I lose the account. All the time I get 50K accounts, I trade one mini. Yeah, trading a mini with a 50K account is risky. I don't recommend ever doing that. I always think that if you're trading a 50K, you should trade micros no matter what. Because again, it's a whole different ball game once you have a funded account. Once you have a funded account, it's a new game, man. It's not an eval anymore. The evals, you're not as emotionally attached to it because it's not real money yet. And you can trade minis and probably be okay. Sometimes. But once you get to that funded account and you're still trading minis, now your emotions are going to take control, and you're probably not going to take as many good trades, and your account's going to be gone quick. So yeah, I definitely recommend keeping it small. I always scale down after a couple losing trades, 100% down to micros when it does not play out as I expect. Yeah, exactly, right? Exactly. When your trading is not where you want it to be, the markets are hard, scale down. That's what you've seen me do like the past 3 weeks, guys. You guys notice that because the past 3 weeks have been really tough price action, it's been very rare that I have traded a full position in the past 3 weeks. Because I am aware of market conditions. I'm aware of when the market is not as good as it should be, or as it normally is. And I'm okay with, if I do catch a good trade, I'm okay with taking smaller profits than I would have with my full position, because I know that my losses are going to be smaller. And then, once price action gets better again, I scale right back up. And that allows me to, even on my losing weeks, because I'm going to be honest with you guys, but the only time I have losing weeks is when price action is really, really rough. But my losing weeks are so small, guys. My losing weeks are so small because I scale down in my trading. I don't go full positions. And that allows me to, once I have my winning weeks, once price action gets better, I scale up a lot bigger, and I'm able to have these big winning weeks that completely, triple, quadruple, 5 times, 6 times, 7 times my losing weeks. That's what trading's about. It's about managing your risk, right? Because I could, on my worst losing week, like what's the most I've lost in a week this year was that one really bad week I had where I lost like 9,000, right? That was my worst losing week of the year, was 9,000. And what happened after the next 2 weeks? It was over 50 in profits, right? Because I managed my risk. Because I don't let that losing week be detrimental to my account or my psychology. If I went over my loss limit on any of those days throughout the week, I would have been down so much more, because then it would snowball into the next day and the next day, and then I wouldn't be able to make those losses back as easy the following week. Right? That's why I scaled down. Because the past 3 weeks, they have not been amazing. They've been really tough, but anytime I've had a losing week, it's only been like a few thousand, right? It's been really small because I've been able to make up for some of my losing trades with some winning trades, get back to break even, get back into the green, and keep my losses very small. So then when I have my winning weeks, they're way bigger, way bigger. That's truly what trading's about. Trading, in my opinion, is not about win rate. It's about risk management. It's about risk to reward. And yeah, if you have a good win rate, it's going to make your trading a lot better, that's for sure. But if you focus on win rate alone, you're not going to be successful. You got to focus on risk to reward, risk management. Imagine if you only focus on risk management and then your win rate starts getting higher and higher, you're going to be unstoppable. You're going to be an amazing trader. But if you only focus on win rate and you don't have a good risk to reward plan, you're going to get wrecked. Just back to the charts real quick, and then I'll answer some of your guys' questions. I'll read through the chat. This is really bad price action right now, guys. This is very bad price action. There's no follow through. Nothing is happening. We're choppy. We're range bound. This is not price action that I would trade. I would be waiting for it to get a lot better than this. Just to touch on that real quick. No entries here. This is not good. Let's see. How many micros should we trade on a 50K account? Okay, so this depends on what your risk management plan looks like. I would recommend 2 to 4 micros. If you are a very good trader with really good risk management, maybe scale up to 5 to 6 micros, right? But I wouldn't go over that. I would not. I don't think it's worth it. I don't think it's worth it. I really don't. And what you need to do, though, is do the math. And do the math based around how much you're willing to risk per day. If your drawdown is 2,000 and you're willing to risk 200 a day, that's 10% of your account, which is pretty high, but I think it's not the end of the world with prop firms because, again, it's a lot different risk with prop firms. If you're risking 200 a day, then you need to be trying to make over 200 a day to make it worth it. You need to be making at least 300 to 400 a day, right? That should be your goal. And if you can't make 300 to 400 a day, then you shouldn't be risking more than 200. You should be risking maybe 100. And then you can do the math based around that. Okay, if you're going to risk 200 a day and you're going to trade 4 micros, right? That's $2. That means, that's $2 a tick. That means you can risk 100 ticks a day, right? You could risk 100 ticks a day. That means you could do 2 50-tick trades, or you could do one 100-tick trade. 100 tick stop loss or 2 50-tick stop losses. So you got to break the math down like that. Because if you come into this trading game with no plan, if you come into the market with no plan, and you tell yourself, I'm going to risk 200 a day, you need to break it down even further, get more specific. That how many trades is that going to take for you to lose $200? How many ticks is it going to take? How many contracts am I going to go in, right? If you have that all specified into detail, a detailed plan, I'm telling you right now, your trading is going to improve so much. It's going to improve so much. Your risk management is going to be off the charts, pun intended. It's going to be so good. But if you come into the market with absolutely no plan, you don't know how much you're risking, you don't even know how much these ticks are worth, you don't know how many contracts you're going in per day. How can you expect to be successful in trading? You can't. That's an unrealistic expectation. Very unrealistic. right? You got to treat this like a profession. You got to treat this like this is literally your job. You come in with a very strict plan every single day, because at the end of the day, the market is very chaotic, guys. The market is ever changing. It's always different. You have to be steadfast. You have to be the cornerstone, right? You have to be strong. You have to have a very dialed in strategy, and you have to be consistent every day, because this market is not going to be consistent. And if you're not consistent, that means your trading is going to be atrocious, right? It's just a fact. Yeah, Omar, it's some bad PA right now, right? Bad PA. Hey, but I know you as a trader and as a person, Omar. I know that you're holding yourself accountable, and publicly you're holding yourself accountable. And I know that this is just a mistake you made, but the good thing is you said I hit my loss limit, right? So that means I know, hopefully, that now you're just going to walk away. You're going to go on your run, or you're going to do what you need to do. And that's fine. You hit your loss limit, you're going to move on to the next day, right? And you're going to learn from it. That's because I know you as a trader and as a person. Accountability is everything. You're going to move on. You're going to be fine. Right? I know that most of you guys are the same way. And some of us are still struggling and trying to get to that point. But if you break your rules, you have to learn from it and move on. Right? You have to have rules and then move on to the next day. If you don't have rules, it's going to be a little dangerous for you. You're right, Matthew. Yeah, this price action is pretty bad. Morning Honest Money. Yeah, no, you have not missed anything. You have not missed anything. There's been in my opinion, no real trade opportunities so far today. Thank you, Forever Loading. Yeah, man. I mean, that's the best thing to do when price action is bad, is learn. Educate yourself. Don't try to trade. Don't try to trade this. Just go and educate yourself. Whether that's listening to me and taking notes, or that's going and watching a video on your own, doing charting, doing back testing. That's what you want to do on these types of days. Don't sit in front of these charts and continue to try to take bad trades. Don't do that. That's not going to help you. When you see price action like this, and I'm telling you consistently that this price action is not worth trading, then just go learn, go educate yourself. Use this time to be more educated, to learn the strategy, right? To journal, to create a risk management plan. Use this time to benefit you. Don't use it to take bad trades. 3 strikes and out is my rule. Love that rule. Nice baseball rule right there, trade 903. It's a good rule, man. Yeah, you lose 3 trades and you're done. That's it. You sit on the bench. You're a bench warmer for the rest of the game. You're waiting for the next game. I love that. That's awesome. You too, Christian. Enjoy your time with your family, man. Have a safe flight. Thanks, Omar. You as well, man. You as well. Have a great day. Having a lot of trouble with becoming emotional and burning mental capital when we get into bad PA. Yes. That's exactly what I'm referring to right now, Tony. Because it is almost impossible not to let this kind of price action drain you mentally unless you're doing something else with your time. So like I said, whenever you see this price action, you either need to log off of all of your trading stuff completely or study. Use this time to study. Do not trade. Just say for the next hour, I'm only going to study. I'm not going to trade, right? That's what I would focus on. That's a way that you're not burning your mental capital. Instead, you're growing it, right? You're gaining more mental capital because now you're gaining knowledge of the market. You're gaining knowledge of the strategy. And you're teaching yourself discipline and patience. So using this time where you thought you would be trading, instead to gain more knowledge and become more educated on trading, it's going to help so much. Well, I 100%, I feel that, right? But you can still stay on the charts, but just don't trade. Just chart. Like what you could even do is you could just pull up the daily time frame like this. You could zoom out and you could go like this and just go somewhere random, right? You could just pull up the normal NQ chart and just start charting out other levels, right? Use the replay tool. Go somewhere where you can't see the active price action right now. Get away from it. Don't even look at it. Just start charting out other levels and practicing your strategy, right? Start looking at these, just start learning, practicing. Don't even look at what's happening in price action right now. Maybe you don't even look at NQ whatsoever, right? Maybe you exit out of NQ. And now you just open up YouTube or you go to one of my videos and you start watching a video. You start taking notes, right? Because I know it's hard for us to hop off the charts when we are wanting to take a trade. I completely understand that feeling. So instead of completely hopping off the charts, you can just now start to use this time and to still focus on trading, but just in a different way. That's one thing that I've found has helped me not take bad trades during bad price action. All right, because this right here is pretty bad. I just wait for Joe to say he's getting off. Exactly. And then the price action gets great. Yeah, guys, so what I would say is don't waste your time trying to trade this right now until you see good price action. Like, let's say we see a breakout right now to the sell side. Cool, maybe you start looking for a setup. Maybe we start looking for a setup down to sell side, right? Bouncing off a 15-minute bearish unicorn. Maybe you start looking for something. But if we just continue to chop and range, just don't do it. Just stay out. Like, if I was actively trading, there's a reason I haven't called any trades out yet. Like, I haven't actually called out a real trade setup. I was talking about the longs up here, right? But we never got the bounce that we wanted to see off of this level, so I never actually called out the trade. There's been no trade yet where I've actually called out a real trade because there hasn't been anything worth it. So if I was actively trading, there's not one trade so far I would have taken. There's not one trade I would have taken yet in this price action. It is right now a little bit. I expect price to try and make one move today, at least. And right now it looks like it's trying to make a move down to sell side. But yeah, right now it's just very seek and destroy, right? And it's not even great seek and destroy because we're not really clearly, going buy side, sell side, buy side, sell side. Do you think you will hop on for a prop firm if we don't see good PA? I don't plan on it, but here's what I will say. If there's good price action, like I will come back and check out the charts, around that time or before that time. And I'll determine, okay, if price action is good, right, and there's probably some trade setups, then yeah, I'll run a session and we'll do it, and I'll call out trades. But if price action is still really bad during that time, then there's not really a point in running a session. I would say just use that time again for education. But yeah, if price action is really good later on, then yeah, I'll say, yeah, guys, I'm gonna hop on for a session. We'll talk about some trades. It's just going to be based upon if there is actually good price action. What's up, C Breezy? Quick question or two. Since you started trading, were your charts always clean? Did you use any indicators besides volume and VWAP that are legit and helpful for a beginner? I tested certain ones out, right? Like Lux Algo, right? I would use some Lux Algo indicators for fair value gaps and for certain things like that, just to help me start getting a good basis of learning. But I found that in my trading, I don't need all of the indicators because they don't really align with my strategy. Like in terms of you're thinking of like EMA and all of these different indicators. I don't use those for my strategy, so I don't see it. I used to use them, and I tried to use them when I was trading options. But I just didn't see how they would benefit me. They didn't align with my strategy, so I stopped using them. But I do recommend as a beginner, if you're having trouble, charting out any fair value gaps, use the Lux Algo fair value gap indicator, right? And you can go up to indicators, and you can look up. You could just look up, let's say FVG, and then you can look for Lux Algo or any of these, right? There's probably some good ones that I don't know of, but you can look up Lux Algo. Let's see, fair value gap. Where is it? Does anybody know what the exact Lux Algo for fair value gaps is? Oh, right here. Right here. Okay, cool. Use this. Right? Boom. It just charted out all of my 1 minute fair value gaps right there for me. that are valid, right? So start using that. That's a good one. You can use these. I don't use them because I can see them now in real time very quick, right? But if this is something you want to start using and you see, you need it to start seeing these levels, I would start using, something like this. And it's easy. You just go up to indicators, you just type in Lux Algo, and there's a bunch of them that you can use, right? You can use them for sessions, for Asia session, New York session, for just ICT concepts in general. There's a bunch of them. Volume profile, all of these different ones for value gaps, liquidity sweeps, right? So yeah, I would recommend if you're struggling to understand these concepts, use these. Use these because they will be helpful for sure. Honest money, let's see. Haven't we had this chop PA at opening for weeks now? Not every day, but yes, for a lot of days consistently, we've had very choppy opening price action. Very, very choppy for sure. And kind of like yesterday, right? Where yesterday we had chop, a little bit of move chop, a little bit of move chop, and then we finally made our move, but our real move didn't happen until like 11 Eastern, so like another 30 minutes, right? So I'd probably, if you are going to look to trade, I'd probably wait, at least until the next 30 minutes to see if we finally get a real breakout. For sure, Jolly. For sure, yeah. I'll check it out. And then if you guys are seeing stuff, hit me up in the chat. Be like, hey, Trader Joe, can you check out the charts? I'm seeing this right here. Can you let me know if this is valid, right? Even if I'm not on a session, you can always hit me up and ask me about a level. Let's see. Pablo says, something that helped me with overtrading, opened a live account with $200 and traded that for a week or two. The restrictions, 1 micro, force you to trade patiently. Once you realize how tough having no drawdown is, switching to a PA with 2K drawdown becomes cake. I love that idea. That's very cool. That honestly offers great perspective. I think that's awesome. Yeah, because you literally are forced, because you literally are not allowed to trade more than 1 micro with that amount of cash in a live account. That's awesome. I think that's a fantastic idea. And then if you are trading really good with a $200 account with 1 micro, you could even scale that live account and make some money on it. And it could be both. It could be a lesson for you, and it could also be a way to make some cash, right? To grow a small account. I think that's an awesome idea, man. Awesome idea. So yeah, very seek and destroy right now, guys. We just came down for sell side. We came up for buy side. Sell side, buy side, sell side, buy side, back and forth. So yeah, I don't see any trades that I'm going to be calling out for you guys during this session. To be honest, I recommend staying out of this completely. Again, hold on to your capital. Hold on to your mental capital. Don't waste it right now. Don't waste your actual capital. Don't waste your mental capital. Save it for better price action. Save it for later on in the day if there's good price action, right? Don't force it right now and then lose all of your money, hit your loss limit, and then you're not able to trade later. So that's what I would say right now. And I think that I'm going to hop off here, right? We've been on here for an hour. I think we've covered great education. We've talked about really good levels, and I'm going to remind you one more time, if you are struggling with your mental capital, you are struggling to stay out of this market, either one, completely log off of all of your trading softwares, get off the charts, or two, start learning education. Go watch my educational videos. Go watch YouTube educational videos, right? Go do whatever you need to do to learn more, get more educated. Those are the two things I would tell you right now. If you're struggling too much and you have too much temptation, log off completely and go take your dog on a walk or go to the gym, right? If you can still keep discipline a little bit, then just go start learning. Start learning, taking notes, journaling. That's what I would recommend. So I'm going to hop off here, guys. I appreciate you all so much. More than you guys know. You guys are awesome. I really loved all your questions today. Very interactive session here. Continue to ask me questions. Continue to learn. Continue to grow. And when price action gets better, boom, you look to execute your trades. Thank you, Honest Money. Of course, guys. Of course. God bless all of you. You stay safe. And remember, John will be taking care of you soon. He'll have his session as well. I think today is psychology. A lot of you guys don't go to any of John's sessions, and I don't know why. Maybe you're busy, but you're missing out on a lot of very crucial information if you're missing out on John's sessions. I'll tell you right now, if you're struggling with this stuff that I'm talking about, go join John's sessions. I'm telling you right now. And I understand if you have work, right? If you have stuff you got to do, that's okay. But if you are struggling with psychology, risk management, with wellness, you're missing out on all of this free education with John, right? Amazing education. So I recommend you guys watch those sessions. Take notes. They're so beneficial. So that's what I'll leave you with. Again, you guys have an amazing day. Stay safe. God bless you. And I will talk to you all later. Peace out.